Good morning and welcome to this morning's Munch&Learn. Today we have Choice Business Loans, who are specialists in alternative business finance. And we've got the co-director, Sharon Cook, who's going to run us through what it is they do and how it can help local businesses. Morning, Sharon. How are you?
Good morning. Very well. Thank you, David. Yep.
Excellent. Well, thank you very much for spending some time. Thanks very much for spending some time to join us this morning. So you've got some stuff to go through with us, which is going to be fantastic. So I'll hand over to you and feel free to give me if you want any help and directions or questions and things like that, just give me a shout, let me know.
Thank you. That's lovely. Thank you very much. So business finance is really emotive and really stressful. We find that all the time. So in stress in different ways, you're growing your business, you need money to grow. You've just won a new contract, but you can't afford to do it. You have no money. Everything is stress when it comes around to money, and it's never easy. And in this marketplace, excuse me, in this marketplace where the banks are a little less eager to lend, and then there's all this other choice. And the question always is, where do I go for the right money for my business, for my needs? And you don't go to Google to see your health. That is a bad move, right? You don't go because you've always got something terminal if you do that. And the same goes with your business finance. You don't go to Google because we all know that Google will just have the biggest marketing budget at the top. So you want to avoid that. And really doing some really deep research and understanding exactly what you're getting yourself into is really important, and important for your sanity as well as your business. So to start with today, I am going to run through just some questions that you can ask yourself to think about how you get your business into a place that's a little bit more secure before you go out and look for finance. So do you know how much revenue you need to break even? Have you got any idea? No idea? Are you hitting it? Are you missing it? Do you vaguely know where you are? So just make a note of where you think you might be today and have a think about that. Do you use cash flow forecasts to manage your business? Do you know exactly what's going to happen in the next month, 2 months, 3 months, 4 months? Are you prepared for those pinch points? Do you know when your VAT's going to hit? Do you know when your corporation, if you get, hopefully, making money to pay your corporation tax bill? Do you have some expenses coming up with new projects? Do you know when your rent's due? All the big bills, at what point throughout the year do they land? And do you have the cash flow to manage it? So is it no, yes, struggling, or sometimes? Do you have enough cash reserve to survive the next quarter? After COVID, that was a really big thing where people literally just ran out of cash. So having enough cash in your business to make sure you get through the next quarter can be really powerful to get you to the next stage. So do you need a plan? Are you improving? Is it depleting your cash revenues, or are you secure? Do you review your monthly debtors and chase late payments? Everybody hates debt collection. It's rubbish. And it's awful to have to speak to your clients and say, do you know that really good job I've just done for you? Can you pay me? Nobody likes asking that question. It's a fair question to ask, but people don't do it, and they just leave things at the back of the room. So really putting that forefront where people are paying you on time can really help with your cash flow management. So how do you do it? Do you monitor your own debts on a monthly basis? Sounds really crazy, but how much money have you got going out the door? How much do you owe other people? Are you managing that correctly? And are you really in control? And sometimes early payments can actually give you discounts. So it's important to manage those. Are there any large financial bumps you should be planning for? Do you need a new truck? Do you need to hire staff? Not that it's a bump, but it can be really expensive to hire staff. Do you have a big VAT bill coming up? Have you put your VAT aside and then spent it on something else? What's your client base look like? How's your 80-20 rule? If you've got one really large client and they go, what will that happen to your cash flow? And what about supply costs? Lots of our manufacturers at the moment that we work with are worried about the hike in the minimum wage or the living wage. In some cases, that costs one of my clients almost £50,000 a year. That's a big bump. So looking at those bumps and actually understanding what's coming through is really important to you. Is all that you sell profitable? And have you planned for price increases? We never put our prices up. And we're worried that if we put our prices up, we may lose our clients. But think about everybody else in the world. Think about how everybody else manages this. Every time you go to the supermarket, something's more expensive. They have passed that price increase on to you as the consumer. And so you as a business owner are allowed to do the same thing. You cannot absorb everything. You must be profitable to survive. So what's the answer to that question for you? And finance is not for distressed businesses. If you're in distress, you do not need to put more money into your business. You need to organize your business. You need help to get yourself out of that distress situation, because you could just be getting yourself into a worst case scenario. And it's no point just putting expensive money in after the case. So things that we can use, and I've got some highlights here, and I can't cover every single product because A, it would take about a week, and B, you'd all be asleep by the end of it all. But invoice discounting and invoice finance. Now, in the past, this used to just be your whole book of debtors. You get a certain amount of money from that debtor book, and it used to be quite expensive. But now we have different formats. So we have one lender that will allow you to technically sell your invoice, but not change your bank details. So you can advance that money really quick and easy, and without any personal guarantees as well. You might have one customer, let's say a big supermarket or something like that, and you think, well, actually, they're going to take 45, 60 days to pay me. And you might just want to advance those because they keep ordering and you don't have the cash flow to come through. Other options for these are just one-off big ones. So ones that you might not want to collect the debt, and you can finance those. Really large ones, yes, you have to change your bank details, so it's a bit of a pain, but also you get somebody else politely chasing that debt for you and helping you get through sometimes red tape of some of these bigger customers. So it's important to understand that's a working capital cycle. So when your money's out and not being paid, you have to have money to replace that to do the rest of your work. And using an invoice finance process will allow you to accelerate that money back into your bank account. Revolving credit facilities. Now, these are varied types of revolving things. So think overdraft. That's the easiest thing to think about. In some cases, it's not linked to your bank. Okay, so your bank will give you an overdraft. Sometimes they want to have it secured. They'll want to have maybe a charge over your property. But if you've got a decent sized debtor book, you can have an overdraft that you can dip in and out of that sits almost like in level and parallel with your debtor book. So you kind of only pay for what you use, and it's not invoice finance. There are some other smaller facilities that sit just to the side. And in a way, excuse me, in a way, a credit card is a bit like a revolving credit facility, and that's fine to use, but only if you pay it regularly and don't keep it outstanding because they're really expensive. Whereas a revolving credit facility should be along the lines of more sort of sub 10% APR, but handy to have and keep reusing. And there are some very specific ones out there for export and other bits and pieces. So that's quite important to think about what you need the money for and how you're using it. So short-term finance is something we would just consider as a loan. So you want to expand, you're not really buying anything, and it can be all sorts. So you can use it for VAT payments, corporation tax, R&D tax credits. If you've got R&D tax credits out there and you want to advance them, we can get money for that. If you just want expansion, working capital, anything that's a light sort of intangible, you need a loan. That's what you need to do. And that money should be going out the door fairly quickly as well, and then giving you the return that you need. And you can get a loan from anywhere from, we say 3 months, so it can be shorter, 3 months all the way through to 60 months, sometimes 6 years. But in general, that's your thing. And always think about how long you're going to take the loan for. And think about a couple of things here. Can you repay that loan early and save on interest? without penalty. Because then you can amortize it over 5 years, but actually potentially pay it back in 3, keeping your monthly repayments quite small. If you can't repay it early and you can't save on interest, then you really need to be looking at the cost of the interest in totality, and you've got to be happy with that. And I always say one thing is, if you can afford the monthly repayments, that's good. If you are concerned about them, do not take the money. So we are very fixated on interest rates, and rightfully so, because that's part of the cost. But interest rates are always applied in different ways. So some of our short-term lenders will do monthly, and they will range anywhere between 2 and 5% per month. That's a lot of money. Okay, so other loans that over 5 years, they might be between 11 and 17% as an example, but that's an APR. So that's a cost that you can do. So rather looking at the actual cost as an interest rate, ask the question, how much is the monthly repayment? How much is the interest per year? How much is my total repayment, including capital? Those things are the important questions that you must ask. And then you can work backwards. So being able to work backwards from the end result will give you the answers that you need. Do not just take for granted what people might be saying just about the interest rates, because you might not know how it's being charged. Flat rate, APR, yearly interest, monthly interest, they're all confusing. Know the cost. So we have something for retailers, and also this is slightly morphed now, but for online retailers, where they look at your monthly sales that go through your online portal or your merchant terminal, anything like that. And they will advance you anywhere up to 2 months of your turnover. In some cases, one of my clients, we're doing something quite big, they're online retailer, and they are multi-million-pound turnover. And they need some money quick to, funnily enough, buy something. And they need the money really quickly. And this is a great way, because they can just look it in. They just look at all of your information. They just plug in. We were talking about AI earlier. This is like an AI thing that they do. They just plug into your terminals, into your portals. They see the activity. They see your seasonality. They can see it really quickly, and they can advance you money really quickly. In less than a week, you can have money in your hand. However, it can be expensive. So, and it's expensive along the lines of, you borrow 10 grand, you pay back 12, but you might pay that back in 3, 6, or 9 months. So when you work it out like that, it can be expensive. But it does mean that if you're flowing really quickly, as in or you're buying things and selling them quickly, that's okay, because your turnaround is quick. So the more that you can sell, the more money that you can make. And that's how you have to think about those cycles. It's an interesting one, and worth exploring if you do a lot of online sales. Just check the time, 15:15. Right, lovely. So supplier finance. I'm aware I could talk about this for hours. I'm so sorry. So supplier finance is a really, really interesting one. And it allows you to negotiate a couple of things. So if I buy more, can I get a cheaper price? If I pay you early, can I get a discount? And those two things should help with the cost of the supplier finance and hopefully negate it almost. So if I've got a big bill and I'm going to pay Joe Blogg's supplier over there 20 grand, I can now spread that over 6 months, 3, 6, or 12 months, I think is the general terms. So day one, my supplier gets paid. I get my discount, or I can buy more because I'm now paying it over 6 months. The project that I'm doing maybe will pay me out in 3 months. So actually I'm managing my cash flow, and then I can repay that over time. It's a slightly weird way it can work. Sometimes it's interest and capital repayments at once. And other times it's like, well, you're taking it for 6 months. We're going to charge you the interest every month. And then you repay the capital cycle as and when you draw down on the facility that we've given you. It's a little bit interchangeable. I have lots of clients that use this and they love it. And they love it because they can absolutely manage their projects that they do that are a bit more elongated. So where they might get their PO today, but they know they're not going to get paid out until month 4. And that gives them time to manage their cash flow a lot better. So key takeaways, you'll be pleased to know, David, we're at the end, is monitor your business costs. Know your profit margins. Prepare for your pinch points now, not at the pinch point time, because if you're in a stronger position, you'll get cheaper finance. Be on top of your creditors and debtors, because everybody likes to see good management accounts. Cash flow forecasting and cash flow management, working with your accountant or your business advisors to make sure you're on top of those things. Choose the right form of finance for your needs and don't get pressured into something that isn't right for you. And analyze the health of your business before applying. And I'm just going to go into a little bit of detail here on that. It's important. Yes, the business is the lending and borrowing entity, but you as directors, they are lending to you. Really important. They are lending to the business, but you are the business. You're not a multinational, you're the business. So make sure all directors' credit is healthy. Make sure your business credit is healthy. And I'm happy to check anybody's business credit for them on Experian and Credit Safe as we have access. So if you want me to, just get in touch and I'll send you your report for free. Make sure that your bank statements are clean. There's no point having bounces on your bank statements. And we get this sometimes where people run multiple accounts and they are shifting money in and out. And just occasionally that money doesn't shift in time and therefore you get return direct debit. It's hard. It's always really hard to say, oh, hold on a second, it's because they haven't shifted the money. It just makes for bad management and lenders don't like it. So make sure 3 to 6 months worth of your business bank statements are all beautiful. Have your accounts in order, the full accounts, and make sure you understand what's on them. Okay, healthy balance sheets are always good, and money at bank is always good. You're always in a stronger borrowing position when you technically don't really need the money. There we go. Hopefully that's covered everything.
Wow. There you go.
It was a bit quick, sorry. But no, any questions?
That's really, really, really good. It's amazing actually how many different financial options are out there for businesses, and it's a bit of a minefield. If you had to put a number on it, how many different options do you think there are available for the average SME to? So oh God, there's hundreds. It's got to be at least 200. Wow. At least, and that doesn't include every single lender out there, I'm afraid. And there's just hundreds. And we run what we call Bibles, where we have all of our lenders listed out, and they're just huge. There are pages upon pages of lender after lender. Yeah. And of course, business finance can be gained from anything from using a bridge against your own personal property through to an unsecured lending opportunity. So there's all sorts there. Yeah, it's tons of them. Definitely need the experts to navigate that field then, if there's so many different options out there. There are, or just do your own research. It's really important to do your own research and make sure that you're getting the right deal. And I would always suggest do try your bank first and get the no, because you won't get cheaper money than that at your bank. Okay. So good advice. Any questions out there?
Yeah, Duncan. Me please. Hello, David. Morning, hello everyone. Hello, Sharon. That was Duncan. Very informative. And I think in my experience in this coaching world in the last 4 years, what you've sorry, I joined a little bit late, but I mean, that is gold dust. And I think that last slide that you just had, because so many people that I've experienced just go into it, myself included. Oh God, I need money to go into it without even considering anything, and yeah, reap the consequences. So thank you. I think that was invaluable. Are those slides available somewhere? I can send them to Karen and she can distribute them, no problem. And David, Simon, anyone can have them, of course. Super. I think thank you very much. Really informative. You're welcome. Thank you.
Very good. And Simon's just put a question in. What's the situation with post-COVID loans now? Things like Sybil's, etc. Are they dead? Is there any alternatives?
Oh, the bounce back loan. What a wonderful thing that was.
But yes, nightmares about them.
Oh, don't. There's still people with bounce back and CBILS loans, and it's like, you can't go for finance until you pay one of them off. But yes, not dead, Simon, is the answer. So the recovery loan scheme runs until the end of June, but then there is a new scheme, the enterprise growth scheme. It's just the same thing with a different badge. So it's exactly the same thing, which has meant, though, because they've taken that to 2026, I think, more lenders have actually joined that bandwagon. But it's important to understand a couple of things. CBILS, there was no personal guarantee. You were kind of protected a little bit as the borrower.
Yeah.
That's not the case with the RLS and the next one and the next one. It's the lender that's protected. And it's really important that people don't understand that. So they think, oh, I'm protected, I'm fine. But no, you still sign a personal guarantee. Sometimes it can be a partial personal guarantee, to be fair. But normally it's 100%. Everything has to go wrong. They have to go through the administration, liquidation, recovery process. And then whatever is at the end of that left over, that is when the lender can claim off the taxpayer.
Right. That's really important to know. That's a critical differential, isn't it, between what was and what is?
Yeah, it's not as pretty as it used to be. But what it does do is it does allow lenders to lend where they might not have normally lent to someone. Okay. And that specifically is often around the value of the personal guarantee. A lot of younger business owners are coming up and they're not homeowners. They don't want to be. They want to work on a beach in Bali for 3 months of the year, or whatever. Me too, yeah. Me too. Yes, I do too. Just sell my house. Don't tell my husband and go to Bali for a week. It'd be great. But they don't have the personal guarantee in the background. So the recovery loan scheme kind of adds a level of insurance for the lender. It's like the old EFG. I don't know if you remember that. If any bank people listen to this ever, they'll cringe because the paperwork was like that for the EFG and they never enjoyed doing it. But it's the same thing. It's just an insurance at the end.
Okay. Okay, got it. Thank you for that.
Okay.
Very good.
I would also
thank
you. I'd also just note for people around the area that, especially in Buckinghamshire at the moment, but I think it's nationwide, there are some rural grants as well. I'll send it to you, Simon, to send out to your network and Dave. So you've got that. But anywhere between, I think it's £500 and up to £300,000, and it's match funding. So people living in rural areas in Buckinghamshire, and I know it's around the country in different guises, can apply for these grants for new projects. So if you were starting your gym in the countryside, that would be a brand new project, and that you could apply for that grant, and it's match funded.
Got it.
Big money. Big money.
That's amazing.
Yeah.
Excuse my naivety. Match funding, could you explain?
Yeah, of course. So let's say my project is £100,000. I've got to put 50 in. They'll give me 50.
Okay. All right.
And I think, off the top of my head, I think it's retrospective as well. So you probably have to find 100,000, and then you get the 50 back. And that's where we can actually help with lending. So one of Amy's clients is a food truck, and he got £20,000 towards a new food truck. So
brilliant.
And we supported that with the startup loan for the match funding part of it.
Okay.
As an example.
Yeah, very good. Creativity, love it.
Yep. Oh, we like solutions. It's all about the solution for us. So whatever that looks like.
Creative financing.
Yes.
Creative accountancy, creative financing.
No, not creative accountancy. That's not quite what we do. Not quite what we do. Not sure allowed to do that anymore.
It's interesting you mentioned about the APR earlier, because obviously that APR figure is supposed to be able to give everybody a benchmark to compare loans, competitive loans against each other. My background's automotive, and some lenders would give a 3-month holiday break at the beginning of the loan to reduce the APR. So it's interesting you say about look at the costs. It's a really, really important lesson, that, isn't it?
Yeah,
it is.
Look at how much the loan is costing you in pounds and pence.
And people don't. We're busy business owners, and we're not necessarily great at finance, and so we just kind of believe what's put in front of us because we're trusting as human beings.
Yeah.
And just occasionally we get people who've taken a short-term 12-month loan. For my Walker, for example, and they go, "Oh, it's great. I've got it at 5%." No, you've got it at 5% per month.
Yeah.
No, I haven't. It's 5%. No. it's 5% per month. And then when they look at it and you get them to break it down, they're like, oh, it's really expensive. It's like,
yeah, definitely advocating having somebody professional that can advise through that application process, getting the right match for your needs.
So I do agree. I do tend to agree with you, David. I'm not going to lie.
Yeah.
But, you know, even if they come to you or their accountant, and just check the paperwork, sense check it before you sign it. I always ask people to read paperwork before they sign it.
Yeah,
they never do. They never do.
Yeah.
But it's highly advised to do so.
Very good. Have we got any other questions? No, all good. So Sharon, where could our listeners go to find out a little bit more about you, your company, and what services that you can help them with?
Absolutely. We've got a terrible website at choicebusinessloans.co.uk. We have a new one, a spangly new one somewhere, but it's just not gone up yet. But that does cover everything with our stuff. You can find us on LinkedIn. So we've got Choice Business Loans page, or just follow myself, Sharon Cook, on LinkedIn. Yeah, so that's where we are, really. We are also on the Bucks Business First website. You can find us there as well for finance. So.
Very good.
Perfect. Okay. Sharon, thank you ever so much for your time today.
Oh, thank you.
Really interesting.
Good.
Excellent.
And 4 minutes to spare. Look at that.
You go.
I'm impressed.
Well done. Thank you ever so much.
Thanks, guys.
Take
Have
care.
a great day. Take
Thanks,
care.
Julia.
Bye.
Bye.